All right, so as we getting started this evening, once again, ladies and gentlemen, my name is Tasha M. Dyer, the Trade Whisperer, creator of the BYOB Cashout, and I am excited. You guys have had a wonderful, wonderful day. All the 777s in the chat, and as you continue to log on this evening, I need each and every last one of you all to continue to drop it in the chat. Let me know where you are calling in from. I see Camden, South Carolina, Baton Rouge. I mean, we are definitely worldwide on here this evening, and you guys are still logging on. So I'm excited. Now, also, make sure, good evening, Baton Rouge, make sure that you guys are walking in those affirmations. You know, this is where your mindset is so important. And it just excites me, because once again, we saw a testimony that happened in the chat, in our Telegram chat, right? We saw a testimony that literally happened in transition in that chat. So one of the things that we definitely want to make sure that we're doing is those affirmations. I don't care when you sit down to trade or what you're doing. You want to make sure that you sit down and you are definitely walking in those affirmations. I am a master trader. I am the signal. All my trades end in profit. And I cannot tell you how significant and how important that is, right? You want to make sure you walk in that. And that's important. Why is that important? If you're in that Telegram chat, you saw, right, we had a conversation in there where somebody went from saying, I am frustrated to, and I'm going to give that person a shout out because it's their birthday and they literally are like, so happy birthday. And next year they're talking about where they know they're going to be able to walk away from their job. And now they're dropping 777 in the chat just from a shift in mindset. So this is why these affirmations are so important. These affirmations are so important. So yes, we start our calls out with these affirmations. Okay, guys, we start our calls out with these affirmations. So that's exciting to me. Why do we do what we do? Why do we get up on these calls? Why are we here the way that we are? This is why. This is why, right? This is why. Okay, I like that one. That was mine. That was mine. That was definitely mine. So walk in that. I'm trying to get my screen share. I'm a master Forex educator. That was mine. That was mine. And I did that when I couldn't even count pips. So walk in that. Walk in it. Walk in it. Claim it and walk in it. I'm telling you, walk in it. All right. So let's get started here this evening. Let's get started here this evening. Okay, so now that we got our mindsets right, now that we know where we stand and we definitely have our mindsets correct, one of the things that I want to talk to you about tonight, we're going to take this to BYOB Advanced. But as we get started, this is going to be BYOB Advanced. As we get started, if this is your first time trading with us this evening, your first time on Market Talks, your first time looking at BYOB Cashout, let me get a 111 in the chat. 111 in the chat. 111 in the chat. And if you are still learning how to cash out, let me get a 222. All right, so welcome and welcome back. Now, you are not a 111 and a 222 unless it's your first time on Market Talks. So I give you that. Now, so I want to welcome you all and welcome back. So welcome and welcome back. So what I'm gonna do first, and what I'm gonna do first is I'm gonna walk you guys through what the BYOB cash out is. Okay, I'm gonna walk you through exactly what the BYOB cash out is. Okay, all right, that's the first time on Market Talks. I'm gonna walk you through what the BYOB cash out is, and then I'm gonna walk you through why we do this the way that we do this, why we start on a 15-minute chart, because this, I believe, is so important, right? and then I'm going to walk you through like a little advance, because you notice that since we've been on this call, since we've been on the call, and since we've been like our 5 o'clock and our 9 o'clock, right, calls, we would get on there and we would, 777, 777, 777, right? 777, 777. And lately, this past week or two, we've been doing a lot of setups. And so what that has to do with is, and so I've gotten a few inquiries of why, I've gotten a few inquiries, right? I've gotten a few inquiries of, the setups and things of that nature. So I kind of want to take you advanced. So I want to explain a few things to you tonight, why we do the 15-minute chart, right? We're going to start right here talking about the BYOB cash out, what it is. I want to tell you why we do it that way. And then, of course, I'm going to take you a little advanced to kind of show you how you can still apply this, and kind of look at it from another time frame and how this is applicable across the board, because I want you to understand the time frame. So that's what we're going to talk about tonight. So you have a complete understanding of, right? I want you to have a complete understanding of where we are and what the BYOB cash out is and what it does. So you see we had a little consolidation on here today. Let me see if I can get a currency pair that didn't have all that. I don't want to mess with my other markups that we had. So let's talk about what the BYOB cash out is, okay? And because we've had quite a few 777s, but remember, I'm showing you this because May is cash out month, right? This is cash out month. We're going to flood the chat, right? We're going to flood the chat. We still got quite a bit of May to go. We're going to flood the chat with 777s. So I am declaring and affirming, I'm declare and decree, and I'm affirming that if you have never dropped a 777 in the chat, you will drop a 777 in the chat, because I told you, the only thing that I want for my birthday is for you all to flood that chat. That's what this is about for me, right? That's what this is about. That's why I'm here. That's what I'm there for. So if you have never dropped a 777 in the chat, I am affirming, and that's what I want. And I declare and decree over each and every last one of you all that your eyes will be open, that you will receive more clarity, and that you will begin to cash out, right? You got this. So, look, you typed it and I said it. And that's what I want. So now I want you all to understand. So this is where we are. This tool, okay, I want you to understand it. So this tool, now we have this 3 indicators, and I'm going to talk to you about the power of this, and we're going to look at what we did, okay? We're going to look at what we did. Okay, we're gonna look at what we did. So this is made up of 3 indicators, and I'm gonna show you why we start on a 15-minute chart. This does not mean you stay on a 15-minute chart, but I'm gonna show you why we start here as soon as I talk to you and I show you this strategy, okay? So now, the stochastic, a leading indicator, measures momentum, okay? It measures momentum. We have Hikanashi candles, right? Hikanashi candles. So Hikanashi candles, and you also have PSAR, right? We have the PSAR. So we have all of that. So now what you're looking for is that blue line to cross over the red, right? Momentum, and these 2 are lagging. So you're looking for that blue line to cross over the red and an upward or downward momentum. You see these numbers go from 0 to 100, okay? That's the flow of this. And then you're looking for a red candle with a flat top and a PSAR flip to the top, right? A PSAR flip to the top, right? That's what you're looking for. That's what you're looking for. That's it in its simplicity, okay? That's it in its simplicity. So that's what I'm looking for with the BYOB cash out. So that was back tested at 92%. Now, before, I'm going to talk time frame confluence. I'm going to show you that. Now, some of you all are new to the strategy, but I want to show you the time frame confluence on the other charts because, like I said, I'm going to take this to another level tonight. But I just want to show you how simple this is up front because it's literally 3 indicators, okay? This is where I want your mind to understand, and this is where I want to have you tonight, is I want you thinking about this broken down from 3 indicators. This is what I want you thinking about. This is leading, this is lagging, okay? This is leading, this is lagging, okay? Now, I want you to understand the power of this tool, okay? Let's talk about the power of this tool. And then I'm gonna walk you through, I'm gonna show you the power of this tool, and then I'm gonna walk you through what I mean and what I wanna show you. Because right here, you have the strategy, you see you get potential trade, sales, alerts. Now, the strategy in itself, if you've ever studied price action, if you've ever looked at price action trading, which is what you get in the academy, right? If you've ever looked at that, you've ever gone through that, what you're getting is this is price action with a twist, okay? This gives you that clarity and that direction. So you want to understand that. And when you understand what the vibrata does, the vibrata, which you get these alerts, now I don't want you to focus too hard on potential sell, potential buy. I want you understanding that this scan of the market literally is scanning the market, and it's scanning the market, giving you that potential entry trigger. Because when you understand your trend, you understand, right? When you understand your trend, you understand impulse, correction, continuation, impulse, correction, continuation, impulse, correction, continuation, correction, continuation. When you understand that, I'm gonna do it one more time to make sure you're following along with me. Impulse, correction, continuation, correction, continuation. Okay, when you understand that, when you study that, right, going through the academy, when you actually study that, you'll notice that, and then support and resistance lines, you'll know that right here, that's what you call an entry trigger. Well, what the vibrata does is these alerts, they scan the market for you, okay? They scan the market for you, and they trigger at those alerts. So they're basically doing the heavy lifting for you. So these are not signals. What they are opportunities where this gives you an entry trigger for you to do further analysis. Basically what the big banks of the world do. So you're not having to scan through every currency pair. You're not having to do any of that. Then, of course, right here along the side, we have our watch list. We have details on it. We got our headlines, right? Not going through all this tonight. That's not what training is about tonight. But, that's been added to our playlist. But I'm just trying to show you this is a tool literally like what the big banks of the world utilize, all right? And they're using your money. And how do we know that? How do we know that? Well, if I go back to, right, what I'm looking for, this first page of the vibrata, you can kind of see where, once again, this revolutionary software allows you to trade like the banks. Our visionary definitely has a background in investment banking, commercial banking, investment banking. So that's why he's the spokesperson, our visionary, Mr. Gerald D. Rogers, for the BYOB movement. So I'm gonna just let you hear this really quickly. I want you to understand the power behind this tool, and then we're gonna get into our advanced portion.
Wow, folks, I'm just absolutely amazed to know that I'm a part of an organization looking to empower and impact lives across the globe. I've been in this space for over 20 years, commercial banking, lending, and when I look at the web analyzer in comparison to what the big banks of the world utilize, that web analyzer is equivalent, far exceeds the expectation that I was anticipating after having that experience on the investment market. So folks, for those of you who don't understand the magnitude of what you have your hands on, I encourage you, I challenge you to take a deeper dive and realize that literally you have in your own hands the power to become your own bank and allow us to be your partner, to empower you economically, financially, and leave a true legacy.
Now, what I also want you to understand is that what we also looking at right here, where you say BYOB, we have the option, okay? We have the option to drop trade alerts, trade ideas, no analysis needed. We definitely have that option. However, you know, what I want you to understand is what we do is we trade with you and not for you. That is our focus. And that's why tonight, what we're doing, that's why tonight, our focus is helping you understand the charts. And I'm taking this to the next level. And so let me change my screen share with you, right? Let me change my screen share with you. And I'm gonna change my screen share to help you understand why when we went there, it was done on the 15-minute chart and why we built up from the 15-minute chart. I wanna change my screen share. Let me change this for just a moment. Now, to answer the question that's in the chat, no, I'm not pulling trades tonight. This is what we call BYOB Market Talks, okay? Market Talks is a training call, right, where this is how you become the signal, okay? This is definitely how you become the signal. And so we're gonna show you how you definitely become the signal, and then you can trade anytime you want to. So that's what this call is all about. And then also, the other question is for the people who dropped a 777. No, they're using the tools. They're trading to the tools. What we do here is we train to the tools. I help you understand the tools, help you know how to navigate the tools. That's why you are the signal. You are literally the signal. And so because you're the signal, you understand how to utilize the tools, you understand how to navigate through the tools, and then you're able to go in and analyze your own trades and drop your own 777s. So, and I'll show you where we pull some of them from. Of course, the ones from the vibrato are no longer there for those who pulled them from the vibrato, but some probably are there from the harmonic scanner. Now, the company has several tools, of course, that you can utilize. There are several tools that can be utilized, and you can bring anything back and BYOB it, and it's gonna bring you to success, right? So I just wanna make sure you know that as well. So as I'm looking at this right here, okay? As I'm looking at this, I wanna help you understand why you started the 15-minute chart. So I don't know what your trade account looks like. I don't know, right? I don't know. Oh, thank you so much. I don't know what your trade account looks like. I don't know where you began from, but I don't know what your education level has been. But what I do know is that for the average person who knows nothing about market structure, that knows nothing about support and resistance lines, who are still learning that, they can go in the market on a 15-minute chart, grab 10 pips and cash out. Even for the person that does, right? Even for the person that does, you know, if I have, let's say they have to start with a $100 account. Let's say they got to start with a $100 account. If they start with a $100 account, you know, well, I'm gonna go to 50 because I've seen, no, let me stay with 100. Let me stay with 100. And I'm gonna drop this down to 3%. Okay, drop this down to 3%. If you are using proper risk management, I'm gonna say that again, proper risk management. Now I'm gonna tell you, I licensed financial advisor. If I sit down with you to do a retirement plan, there's no way I'm gonna tell you this is what your risk assessment should be. This is what it should be, right? There's no way I can tell you that. What happens is I ask you based on your personality a series of questions, and then we determine what your risk portfolio should look like. You look at this and you determine what your risk portfolio should look like. It is no standard. So you might be a 1%. You might be a 5%. You might be a 3%. You know, plus what is your account balance? So you always want that person to be able to go in and understand how to trade. So everybody shouldn't be taking trades over 10 pips based on where they are. Everybody shouldn't be doing that. So if I'm starting you trading on the hour chart, then what I'm doing is I'm eliminating half of the people who can't start trading from a proper risk management standpoint, because we have to have you trading from proper risk management. That's why the BYOB cash out is taught from the 15-minute chart from the beginning, right? That's why it's taught from there, but it doesn't mean you stay there, because if you look right here, okay, if I'm looking at this, what you're looking at is if I started with $100, okay, at 3%, I should only, my take profit is only 10 pips. So, you know, then of course, my lot size is a 0.03. Look at that. Now right here is telling me that I shouldn't even be over 10 pips. So up to 73 pips, I shouldn't even be there. I shouldn't even touch that until I get to, right? I should increase my lot size up here, but I shouldn't even touch that until I get to, what is that? I got $126 in my account. So this is going to help you make that decision when you can increase that. Should I go for more than 10 pips? Now, this is proper risk management. This is just proper risk management. Now, of course, if you start higher than that, okay, you come with a higher, you come with a higher account balance, you start trading at a higher account balance. Now look right here what you have. You got a 0.15 where you can start trading from, and your lot size, if you can go for longer. You see some of our trades go up for 98 and they're at a 0.02. So this is just a component sheet that's going to help you. Now, of course, you're going to trade the way you want, but this is supposed to help you with proper risk management. And you can literally take this. So it's for my scalpers, for my swing trade, for my intraday traders, right? You can take this and you can walk this all the way down at 125 successful trades from $500. That's over $20,000. And that's 125 successful trades. So that's why it's built from the 15-minute chart. That doesn't mean you have to stay there. It's all personality driven. What is it that you want to do? What is it, right? What is it and how is it that you want to trade? That's what that is, and that's what that means, okay? So I just want to help you guys understand that. Now, the other thing is we've been doing setups, right? We don't control the market. We ride the wave of the market. That's important to understand. We ride the wave of the market, right? We really, really ride the wave. So one thing that I want to help you guys understand is when I say BYOB advanced, you can still start on a different time frame, right? When we're down here, and if I go back in this app, actually I can just stay right here. I can just use this one. We can stay here. So if I go down in this app, right, and you see that I have my 3 indicators we just discussed, stochastic, right, red candle, right, I have all of that. I see this is lining up. If I want to, you can also do it vice versa. So I don't have to start on my 15, I can start on my hour. When we're looking at time frame confluence, so let's just start over here. Let's just start over here, right? If I'm looking for a trade, we would have been on a 15-minute chart like we just discussed on the other trade, and we would have found the setup, right? We would have found the setup, blue line crossover to red around that 80, right? Red candle, flat top, PSR flip to the top, right? That's what we would have been looking for. I'm gonna grab something else to kind of indicate where that would have been active, right? So that would have been right here. Now, time frame confluence says I drop down to the 5-minute. I drop down to the 5-minute. When I drop down to the 5-minute, it needs to still be selling. Now, understand every time frame happens at the same time. Every time frame happens at the same time. They don't do one. When you say they feed into each other, the higher time frames is what the market is doing that determines the direction of the market. The lower time frames, you get to see all the movement. If that makes sense, if that brings more clarity. The higher time frames tell me what the market is doing. The lower time frames is where I see all the movement, right? So this needs to still be selling. So this is going to happen first. Now, my higher time frame, when I go up to my hour, My hour, I'll be looking for, my hour needs to look like a good setup. I'll be looking for the trend of the market. My swing of the market on the hour. My swing of the market on the hour. Right here, I do not have a swing of the market. I do not have a swing of the market that, because I'm looking for a sell, so I'll be looking for a sell. I do not have that. So you be sitting there waiting for that to happen, right? We be waiting on a setup. So what you can do is kind of start looking at your hour chart. And when does my hour chart, right? Let's do it vice versa. So it's the same thing, okay? Let's do it vice versa. When does my hour chart set up? So if my hour chart sets up, now we're talking about swinging the market. So swinging the market does not mean flat candle, flat top, right? That we're talking swinging the market. So when did I see a red candle? I'm gonna put this right here. When did I see a red candle? I saw it here. If I drop down to my 15-minute, right? I drop down to my 15-minute, none of this is actually ready yet. None of this is actually ready yet. None of this is ready. But when did it get ready? It got ready way over here. So that's when you know you could have sold it to that support line. Because when it got ready, that's what that other arrow already is. I got a strong swing of the market right there. So now I'm doing it vice versa, right? And this trade actually came off the harmonic scanner. So this actually came off the harmonic scanner. And so on the hour chart. So, but it wasn't confluence yet, right? At that point, we didn't have confluence on the 4 hour. So if I'm looking at the hour, right? So if I just want to look at this. So I'm showing you how you could have scalped this. Let me back up a minute. I want to make sure you guys are with me. If I'm looking at this, right? If I'm looking at this on my hour, my confluence on my hour is my 4 hour. Like your confluence on the 15-minute is your hour, right? 555, you with me? I'm gonna type it. I'm gonna type it. All right. So for your time frame confluence, right? I'm not talking about where you drop down. I'm talking about the higher time frame you look at, because I'm not looking at every time frame, okay? I'm not looking at every time frame. So if I'm on my 15-minute chart, we go to my hour, right? And if I'm on my hour, I go to my 4 hour. So if I'm sitting here and I'm looking at this, okay? Oh, good, it cleared up your questions. I knew it would. So if I'm glad to hear that though, if it's right here, if I'm on my hour, okay, if I'm on my hour and I go to my 4 hour, I do not have confluence. However, this is a setup that came off the scanner. So for my scalpers, right, the ones that like scalping, I know my intraday traders are probably like, nope, I'm waiting on the complete setup. And I understand that, because what happens is it pulls down, right? If you get into this trade too early, it's gonna hit that support line and it's gonna pull back up because it's not confluent. It's gonna hit this support line and this trade is gonna pull back up. That's what's gonna happen. And that's what it's actually doing right now, right? Now, if I'm looking, you see it's pulling back up. You see it's pulling back up. Look what my stochastic is going up. I got a green candle going up. That's what's happening. That's what we know it's going to do, right? Now, if I look right here, okay, if I look right here on my hour where I first got a red candle, right? And I drop down to the 15 and I look for that tighter entry point, all that is time frame confluence, flip the opposite direction, vice versa. So for my scalpers or my individuals that scalp and just want to, like you were trading at 15, you now actually got that entry, and that's like 22 pips that you can catch to that support line. And you can't take it any further, or I can't stay in the trade because it's gonna pull back up because look where my 15-minute is, look where my hour is, right? Look where my hour is. We're gonna look at another one, but let me know, do I have any questions right now? We'll analyze another one. Just let me know, do we have any questions? Drop it in the chat if you have a question. The 5-minute is some serious scalping. The 5-minute would be the 30-minute. The 1 minute and the 30-minute. So you see, the higher time frames is where the market is going, right? The higher time frames. No, that's period. We're talking time frames. I'm not talking currency pairs right now. We're talking just market. We're not talking currency pairs. Time frame confluence is time frame. This is the rules. This has nothing to do with, this has nothing to do with a currency pair. It's just the rules. So I don't know, anybody's rolled up this NZDJPY from earlier? Now, yes, a buy is up. The buy is green, the red is sell. So you definitely that'll definitely be covered. That'll definitely be covered in the academy. Go over stop and resistance. You mean support and resistance? We did the support and resistance lines this morning. If you go to our playlist, if you go to our playlist on the BYOB Challenge YouTube channel, then there is a playlist on support and resistance lines under market structure. But if we have some time this evening, I'll touch on that again, because that's important. If you're doing this, you got to understand support and resistance lines. So after I finish going through this, we'll touch on support and resistance lines again. That's like your lifeline. So, and yeah, I know you were waiting on that. So yes, so definitely. So now this one right here, this is another trade that came through. So this is definitely another trade that we looked at this morning, okay? So if I'm looking at the hour, right? If I'm looking at the hour, okay, this is the first one that came through. So this is one that we pulled from the scanner as well, right? This is a trade that we pulled from the scanner. And it's actually if you were in this trade, it's at take profit 2 right now. If you took this trade, it's at take profit 2. So you definitely should have had some 777s in the chat on this one, right? And there were a lot of 777s in the chat today. So we definitely should have had some take profits on this one. And this one definitely is at 64 pips right now. So this is definitely a very successful trade so far. You know, if it hits take profit 1, another thing you can do too is if it hits take profit 1, you know, you can always do a partial close. Yeah, I'll pull the scanner up in a minute. You can also do a partial close, right? You can always do a partial close, you know, where, because we know it'll hit take profit 1, and then as you can see, when it gets to take profit 2, you know, it'll get a take profit 2, and then you see where my stochastic begins to curve back down some. You always get that correction, right? We always get that correction at a support and resistance line. Look at what's happening, but my 4 hour is still going straight up. My 4 hour is still going straight up. And look at my hour. My hour, it has to go through the correction. Now, how far does it correct? The market's gonna make that decision. So it'll come down. Sometimes that correction, like one of the questions we had this morning, so you see like this was one, look at how it only comes in the middle and pulls back down, right? Or sometimes you see how this one just kind of rolled the bottom. It really was no correction on that. But look at this. You see, so it can come all the way down, or it can just stay up here to come down a little bit. It can come down halfway. The market will make that decision, right? So Yes. So now look at this. So right here on this first candle, let me change the color of this first one, right? So on this first candle, right, on this first one, if I'm looking at this one right here, you see I got my blue line crossed over the red, I got a green candle, right? I have all of this, but when I go to my 4 hour, I did not have confluence right here. I did not have confluence. I did not have confluence. So if you are not, so you can do one or two things. You can wait, or you can drop down, right? You can drop down and see where it was on a lower time frame, where it was. So what I'm doing is my 15-minute vice versa. Instead of starting on the 15-minute and then jumping up to the hour, I'm starting with the hour and dropping down to the 15. You see what I mean? Because remember, you got 4 candles that are in that hour. You got 4 candles that are in that hour. So technically, we would have been looking at this first candle right here. And so when I drop down to my 15, you would actually be somewhere in this zone over here. You'd be somewhere over here. This is where you be. And so you would have entered right up in here. This is where you would have entered the trade at. Right up in here when this trade got ready. This is where you would have entered. So this is where you would have entered. So that's where you would have entered. So just so you know. So now you would have taken profit. You would have taken profit at the support and resistance line unless you got confluence, which we ended up getting confluence. So that's how you would have stayed in this trade and kept going. That's how you would have gotten this trade and kept going. That's how that was going to happen. That's how, and that's why this one is still riding up. And so, but for my ones that like to trade on the 4 hour, the 1 hour, when you look at this right here, you would have waited for this trade to get ready. You're looking, what do we have? Of course, the strategy doesn't change no matter what time frame you're trading on. The strategy does not change no matter what time frame you're trading on. It does not change. Blue line cross over the red in the upward momentum. Green candle with a flat bottom. PSR flip to the bottom. Go up to my 4 hour. This is where we actually got our confluence. And that's when you would have started the trade. Your stop loss is always at the bottom, right? Your stop loss is always below. So now it probably makes sense to you guys when I would tell you when we were looking at the 15, when I would say I would have my stop loss, I will widen it and use it off the hour. So now that probably makes a little bit more sense, right? Probably makes a little bit more sense. Mm-hmm. So, okay, so rather you're going from the 1 hour, 5 minute. Right. So rather from going from the 1 hour to the 5 minute or vice versa, it depends on how long you're looking to stay in the trade. Right. So even if you just want to go to take profit 1, you can still start there. Remember, the higher time frames tell you what the market is actually doing. And the higher time frames tell you what the market is doing. So why is this not pulling up? All right. So that makes sense? What was that? GBP? No, that was an NZDJPY. Okay, I was trying to see, it refreshed, but it's still right here. I'm trying to read the question. So just to clarify, the blue line cross over the red upward. Okay, so go on that playlist. On that playlist, there is on Train the BYOB Cash Out. On that playlist, there is the very first video. The very first video says trading the BYOB Cash Out, right? That's the very first video. So, and then the second one is time frame confluence. So if you want to really understand the strategy, if you still have some questions after what I covered, you know, understanding the stochastic, the red line, the blue line, you really got some questions on that, that's what you want to definitely go back and understand right there. All right? And that's going to help you. So go watch that playlist. Mr. Rogers, can you, yeah, if you can drop that again. You guys want to subscribe to the YouTube channel, okay? All right, so let me see. What's this other one? Oh, I'm so glad to hear that. So, okay, what I said about the stop loss, that's what I was trying. Okay, so the stop loss right here, because I got it's several questions. You guys can post your questions publicly so everybody can get them. So you don't have to send them privately because they actually might be somebody else's question too. So make, you know, you guys can actually do that. So now what I was saying was, you notice that when I said before, I've said before that on the 15-minute chart, right? On the 15-minute chart, that what I do is sometimes you'll see right here, like right here, you see the, well, let me do this because we know it was buying. This is like a correction right here. So I'm gonna just come down here. Like you never put your stop loss on the PSAR, right? You never, ever put your stop loss on the PSAR. You put it below. You put your stop loss below, whether you want to put it 1 pip or you want to put it several pips, right? 1 pip or several pips, okay? So regardless of what you want to, where you want to put it. So if I'm looking to put my stop loss right here, if I'm going for more than 10 pips, if I'm looking for more, when I come up here, this one is just tight, so that's pretty good. But normally I'm definitely coming up to the higher time frame. And when I come to the higher time frame, what I'm doing is, if I'll come to the higher time frame, what I'm doing is I'm definitely right here. I'm on the hour time frame. I'm putting my stop loss below if I'm trying to ride it up, right? So what I said was, is that now that I'm showing you how you can go from the hour down to the 15, right? Now that I'm doing that, is that you can actually see what I was saying as far as you can actually see, like if I'm looking at the hour down to the 15, you can actually see why I mentioned that I would widen my stop loss for that hour. Right? Does that clarify your question? Okay. Because because you're gonna have that pullback, like right here, we've got pullback, we've got correction. So we don't know how far, you know, it's gonna go down. So we got correction. Yeah, got that for sure. We got correction. and we just don't know how far it's going to go down. So I know I said like some of the things that we were going to look at, the harmonic scanner, and somebody asked me about a support and resistance line. So does that answer your questions? Does everybody, you know, have clarity? Because I really wanted to make sure that tonight, as we went through this, you know, we really don't have enough time to pull out another currency pair, but I wanted to make sure that as we went through this, right, that we will go through this, and I'm so glad, because you know, and if we have to do it again, you know, we will. I'm okay with doing it again, because I wanted to, you know, with the way the market's been with the corona, the market's been really good to us, right? The market's been extremely good to us, and you guys have really been cashing out, right? But at the same time, I want everybody in a position where everybody is cashing out. And when we say this call is called Market Talks for a reason, the market speaks to you. And in order for you to understand what the market is saying, this higher time frame, right? These higher time frames is where the market talks. Now, this higher time frame, you see, this determines, like, look, we're on the 4 hour. This higher time frame is what the market is doing, right? This higher time frame is what the market is doing. It's the lower time, right? It's just, you have to determine the direction of what it's doing. The lower time frame, as we go lower, of course, when I go to the hour, I see impulse correction, continuation correction, right? You start seeing those corrections that are happening in there. So the lower you go, the more movement you see. The lower you go, so like if I'm right here, if I'm on this 4 hour, and what I'm gonna do is I'm gonna just circle this for you guys. I'm gonna just circle it. You know, I'm gonna just circle this downtrend that happened right there, okay? That's that. You know, I'm gonna circle that. I drop down. Now you see all of that, right? You see that, that's happening. Now, if I drop down to the 15, you can kind of see the corrections that happen in there. Now, if I drop down to the 15 minute, right? I drop down to the 15 minute, look, you see all the movement. So what you want to understand is what your trade. So now we know it's just one straight long downward trend, right? It's just one straight long downward trend, right? That's what it is. That's what it is. So, but on the 15-minute chart, you have all this activity that's happening. So what I want you to understand is that when you're cashing out on the 15-minute chart, why is the time frame confluence important? Why is that important? Because I get to ask that, if I'm scalping, do I need it? Well, what do you think? Let's look at this, right? This is the overall trend. The overall trend is in a sell, right? The overall trend is in a sell, okay? That's what this is. Now, when you're, look at how much more activity you actually see on the lower time frames. You see these corrections. So this is literally what you might be trading. If you're, exactly, your trade is more accurate. This is what you call, right? This is what you call a counter trend trade. So this is a counter trend trade. If you take a trade this way, this is a counter trend trade, right? Those are counter trend trades. So if you're scalping, you need to know if I'm with the trend or if I'm counter trend trading. So you understand this is a riskier, has more risk to it. This has more risk to it, right? This has less risk to it. So you understand, but you need to know where you are. Am I with the trend? So if I got good swing in the market, then, you know, I will get my pips. That's why I tell you, when you guys ask me to pull up CHF, and I'm like, absolutely not. We're not taking that trade. This is why. If it's not confluent with the market because there's no liquidity in it, or if it's GBP, I know a GBP pair can have a correction of 100 pips because that's GBP. So I know I'll get my money out of it. So, right? So there you have it. Well, that's because of, they do look huge on this from this angle, but this helps you understand. So you actually see all the movement that's happening on this lower time frame. You see all the movement that's happening on this lower time frame. And then, even with our indices, the one thing I want to point out with the indices is that you're really not using that spreadsheet that we put up. You're not using that on this. You want to understand that you want to keep your yes, it's best to wait for confluence. It's best to wait for confluence. Now, I want you to understand with your indices, you got the different types of analysis, okay? You got the different types of analysis with anything. But these are our markups from earlier, right? So we traded and it hit. We marked this up. Look how it hit exactly where we marked it up to. Look how it hit exactly where we marked it up to. It hit, and then it pulled up. It hit exactly where we marked it up to. It's spot on. And then it pulled up because we sit and we analyze and we do it how it should be done, right? You go through. Now, and you got your different types of analysis, right? So we had that bell, the market hit exactly with what we said it was going to do, right? It came up and it peaked. We kept our composure. It pulled down, right? And it pulled back up. And so if I can help you understand some points and not pips, and you want to understand that, you want to understand how this does, but understand that this moves in points and not pips. But also understand you want to have this marked up, make sure you understand that too. But another thing that I definitely want to help you, we talked about this morning about understanding the different types of analysis. And so, if I can help you with that, right? Let me help you. Let me break that down for you. Let me help you with the different types of analysis real quick and why this moves so much and why we sit and wait at the bell and why those things happen. So, and you can kind of see how this is going to bounce off and how it moves with our support and resistance lines as well. Go ahead, Mr. Rogers.
Yeah, before you dive into that. So, ladies and gentlemen, I want you to really understand and appreciate what was disseminated for you when you saw those counter trends on that overall trend. So, for those of you who find yourself when you've entered into a trade and it's in the blue and then it goes into the red, what was just described to you is exactly what was happening and why it's so important for you to understand time frame confluence. And the more accurate you are when you're entering into those trades and making sure that you're not entering into that trade in a counter trend, then you're going to have the opportunity to take full advantage of everything that you have. So this is going to take your entry and your exit point to the next level, and this is going to relieve some of the anxiety that you may have when you're in a trade and you see that red. This is gonna diminish those moments, and it's gonna keep you as accurate as you need to be, and most importantly, put you in the greatest position of accuracy because you're getting this concept and understanding this, and this is taking you to the next dimension when it comes to you becoming your signal. So I want to just kind of help you understand that. So when you see it fall into the red, then in your mind, it should trigger the fact that, guess what? I've actually entered into a counter trend. But if I trust the analysis and let the trade play out, then it's going to reverse. It's going to eventually go back and profit. But once again, this is how you minimize that anxiety, making sure that you understand and practice time frame confluence. So it doesn't matter what you're doing, whatever your trading style is. This is just, once again, going to enhance your accuracy from that standpoint.
Absolutely. Absolutely. And so just so you can kind of understand and just kind of look at what we're doing, I mean, you can kind of see this uptrend right here. I'm on an hour time frame and you see this uptrend. The difference is and why you want to keep your emotions in check. Yes, this definitely, right? Because it's points, that's a lot of points. So you understand that, that pullback is just a pullback, and you understand that, and that's a reversal in the market. But it's also impacted by the fundamentals. And so because of how much it is and because of, what it is, you can kind of see, right, You can kind of see that trend. If I can get the space on here, you can kind of see the trend, and then of course where it broke the trend line and we had a nice drop. And that's the drop that you guys caught. And then you got impulse, correction, continuation. And then of course, when we talk about the bell, we talk about the sentiment of the market, we talk about how they feel. You know, if you want to, how you got to think about it, you know, from a real life scenario. You know, you want to think about it from a real life situation, you know. So you see me post, or you see me talk about my 5-year-old daughter, right? So if you want to talk about technical analysis, fundamental analysis, and sentiment, right? The 3 different types of analysis. So if I wanted to apply that to a real life situation, right? Your technical analysis is literally where blue line cross over the red candle flat top, PR flip to the top, right? That's your technical analysis. That's where you see, right, on the chart, you see that's what you're looking at, which is I got a 5-year-old child. They're supposed to be in school. They've met all the criteria, right? Everything. We live in a school district. This is where they're supposed to go to school. That, right? School is in. The law states this. That's my technical analysis. My fundamental analysis states that, well, COVID said that school shut down and you're gonna homeschool. That's COVID. So that's my fundamentals. So it's impacted, even though your analysis is correct. I live in this school zone. My child needs to go to school. This is what needs to happen. But however, the fundamentals say something different because it shut down the schools for the rest of the year. But then you have your sentiment. How do you feel about that? Well, the sentiment that I have and the sentiment that someone else has is going to be completely different. That's why we saw US 30 moving one way, NAS moving a different way. You know, the sentiment is going to be different. It's different types of companies associated with each one, right? I am a master trader. All my trades in profit. So my sentiment is, oh, okay, I can save on gas money because I don't have to get up and take her to school every day. So that's my sentiment. I'm okay with it. But someone who has to get up and go to work every day, who has nowhere to take their 5-year-old child, their sentiment is going to be entirely different. Their sentiment is going to be a little frustrated. Their sentiment is going to be, okay, what do I do now? So you got to understand that sentiment analysis. How do you feel about what's going on? So you really want to understand when that bell pushes and that bell opens, why we sit and we allow the market to do what the market does. So that's why we have to sit and we have to wait. That's what that's all about. So you really want to understand your analysis and don't second guess yourself and understand who you are and the master trader that you are. So that's what this is all about. All right, ladies and gentlemen. So is the fun? Yes, and that's exactly what I said. Just like COVID, right? My child meets all the criteria. That's why we check our red folders first. You got to check the red folders, right? You got to check the red folders. So you got to check the red folders. So that's why we check red folders before we ever trade. And so, but the market's going to correct itself. The market is going to go back. It is going to correct itself. So, right, everything's going to go back to normal. How long it takes? Now that's the question. But the market is going to correct itself. So my child is still 5 years old. She still lives in that school district. She still has to, by law, has to go to school. So the market is going to correct itself and she is going to be in school. So that is what is going to happen. So she is going to go back to school as soon as all the fundamentals pass. So it'll correct itself. And as you can see, the market corrects itself. So the market is correcting itself. So, all right. So with that being said, this was BYOB Advanced.